Good morning, everyone. It's another exciting episode of Capital Markets Quickie. Let's dive right in. Wall Street had a bit of a tumultuous time on Tuesday. The rising Treasury yields added some pressure, and guess what? It seems we shouldn't hold our breath for a Federal Reserve interest rate cut anytime soon. Let's break down the numbers a bit. The S&P 500 took a dip of almost 1.4%. Meanwhile, the Dow Jones went down about 1.3%. shedding over 425 points. And the Nasdaq, with its tech-heavy lineup, was down nearly 2%, even after closing with gains the day before. And here's an eyebrow raiser. These moves pushed the Dow into the red for this year, just nudging above the 33,000 mark. So what's the talk on the street? Well, some hawkish remarks from the Fed policymakers. These comments seem to signal that thanks to the U.S. economy's resilience, we might see borrowing costs remaining high for a more extended period. Traders are now putting their bets on a 29% chance that there will be a rate hike come the November meeting, a notable increase from 16% just a week ago. And on the bond front, both the 10-year and 30-year Treasury yields surged to their highest in 16 years on Tuesday. This bond sell-off, combined with the oil price jumps and a strengthened dollar, has somewhat curbed the hunger for stocks. In other news, open jobs in the U.S. took an uptick in August. With 9.6 million jobs open at August's end, up from 8.83 million in July, we're left wondering, is the job market cooling down fast enough for the Fed's liking? And keep an eye out. The much-awaited September U.S. jobs report is due this Friday. And just before we wrap things up, a fun tidbit for you. Jerome Powell and the Federal Reserve have joined the social media bandwagon. Yes, you heard it right. The Fed's now on Instagram and Threads. Their goal? Apparently, to make board news and educational content more accessible. So, if you're curious, why not give them a follow? And there we have it, folks. If you're hungry for a deeper dive into these numbers, make sure to check out Sella's Weekly Insights. Stay informed and stay curious. See you next time on Capital Markets Quickie.